Welcome to another day in the Matrix. This is Red Pill Podcast number 111, and we'll be dedicating this one to the post-Eclipse season, and it will be a special episode for sure. We're going to be getting into a lot today. I have a couple of very important things to recap over the past couple weeks since we've made it through both the solar and lunar eclipse, as well as a couple important dates that we spoke about in one of the decodes I released called Sell in May and Go Away Decoded, specifically focusing on this week into next week. And then we will be getting into the stock market, actually reviewing the Dow Jones, NASDAQ. I had a ton of people reach out to me about Hex since Pulse Chain launched, and we'll be going over Helium, Ethereum Classic, Theta Drop, and Render Token. So we have a lot to get into today. It might be one of the longer episodes. We're going to do our best to stay on track and give all the valuable information as we go along. I appreciate every single one of you for being here today. It has been a wild week for me in the Matrix. I had some personal things come up, which made it so I had to take the weekend off. And all is good. I really appreciate everyone's kind words and showing love in messages, etc. Really means the world to me. And if you are new here, welcome to the Wolfpack. We usually have these out on Sundays, but as I mentioned moments ago, got a little bit, out of our normal rhythm, but we are back on track now. Just a day late, but as long as we're producing, that's all that matters. So again, I appreciate everyone's patience and understanding. It's so great to have you here with us, as I mentioned moments ago. Before we get into this, get relaxed, grab yourself a cup of coffee or tea if it's the morning time, or a glass of wine, beer, or any beverage of your choice if it's a little later in the day. And get comfortable. Make sure to get a pen and paper, take some notes while we're going through this, because there's going to be a ton of information for sure. And I hope you all have been keeping up with the past couple Red Pill podcasts, because a lot of what we've discussed have actually come to life. And that's a beautiful thing to know that regardless of our overall thesis, we've been keeping track week by week and revealing some important things to consider, whether the market gives us upside or downside. We talked a lot about these three different Bitcoin scenarios of, for instance, one of us moving into a little bit of a lower high bull trap scenario and then keeling over for scenario number 2, which is a retest of around 25,000, and the idea of going even higher, breaking the current highs in the structure, and how we could have all three of those scenarios play out in an incredibly bullish setup, regardless of the fact of us coming down for any corrections. And if you've paid attention over the last 2 to 3 weeks in our podcasts here, you're going to see that all came to life step by step, each phase, one at a time. So we are in a moment right now where a lot of people are having the same general question about the automatic rally concept, and I completely understand why, but it might be time for those individuals to take a step back and actually fully watch these podcasts and take notes as you go. And you're going to see that I answered a lot of these things, and I gave you the setup, and I even told people about the idea of a $2,000 Ethereum and a retest of a $30,000 Bitcoin, and to consider de-risking if those things come to fruition. I was very, very clear about that. So anyone who is in any leverage trades or, looking to make any moves, you were very well prepared in advance. And it might just be you might have overlooked some of the words of wisdom along the way. And I do not see this being the end of the Bitcoin rally. I'll start this episode off early with that. I do see that the month of June is clearly a wild card in the Bitcoin automatic rally thesis. We're still in the middle of May, and when we look at prior iterations of this automatic rally, it seems to be the month of June is where Bitcoin likes to gravitate to its last leg up, one more move higher, before it rolls over into the months of August, September, etc. So I'm still feeling pretty confident, and I don't want to play only on confidence, and that was why I told everyone, consider the scenario 1 in Bitcoin of a 30K Bitcoin to do a little de-risking if necessary, and that is how it all went. So just starting this off the bat with zero emotions. We're all sophisticated investors here. We're all working towards becoming better investors. But I think sometimes people disregard some of the smaller nuances because it's not dramatic, and I'm not coming out with these face thumbnail video, I'm not dramatic at all. I try to keep it very level-headed, and I think that's what's attractive to most people who find my work. So I hope this helps. But just over the last week to 2 weeks, I've been collecting the same frequently asked questions. And again, I feel like it's because maybe there's not a full, thorough review of these podcasts when they're released. And I do, encourage people to watch them from start to finish. There is so much gnosis being shared in them. I mean, even in an hour presentation, there's so many gems. So just wanted to kick off this post-Eclipse season special with those words, and I'm sure most of you have been keeping up, staying on track. I know our Discord community is doing amazing. We're very interactive with each other, and I appreciate you all for operating like a team and collaborating. It means the world to me. I love seeing how we've grown so much over time, and how when we get big moves in the market, it's almost not noticeable anymore in the Discord when it comes to seeing the way people interact, as opposed to, 2 years ago when there was a big move in the market, it was shocking. Now you guys are so well prepared and emotionally prepared as well. So it's a beautiful thing what we have going on here. Let's keep up. And the final thing I'll say is, if you are new here and you have yet to get any access to our Discord server, just send me a message on Patreon, a Patreon direct message with your full Discord username and the last 4 numbers after your username, and I will reply back to you with a Patreon message with that Discord invite. And we're doing great with the coin voting system over on the Patreon comments and every red pill. Keep that up. We're going over a couple projects that I've not looked at in a very long time, or I will be looking at for the first time. So that's going to be pretty cool. And let's try to do that. Let's give it at least 3 months in between looking at a token we've already reviewed. And I get the same weekly submissions for things like Theta and VeChain, Zilliqa. I get it, but we've reviewed them so many times and really nothing has changed since the last analysis that I've released. Just use the search function inside of our Discord and you're going to be able to find out the last time that I reviewed any coin, pretty much. So let's keep it to new projects, and that's what makes these exciting every week. So let's get into some of the dates. But really quickly, I just want to check out this tab right here. And you see this dotted red line? Well, that actually goes back to a video that I released. I can't even remember how many weeks ago at this point, but it was referencing the May 12th date. And the reason behind May 12th was the 247-day cycle. And it was off of this pivot right here. I spoke about it in a video, and then I also spoke about this pivot right here, which connects to, I believe, May 18th. And that's right here on this dotted line. So now that we've come and gone from this May 12th date, I'm going to go ahead and delete it. And you're going to see this big wick right here. So, well, tail, as some like to call it. But that is a major sign of what I typically see in these 247-day cycles. It's these big, kind of sell events that get swallowed up, or on the upside, you'll see the high still closes red on the day. That's kind of what I've been noticing the most with these 247-day cycles. You could see right here, for instance, this candle where it's a high, but it still ends the day red. And that was a pretty dramatic thing to see us open, be positive 4%, but then drop 4% in the same day. I've been using that as the identity marker for these 247-day cycles. So for instance, you can see right here, this is a upside wick red candle. We actually made our microcycle high, closed the day red, and if I measured back 247 days, you're going to see where it brings me to. It brings me to the same sort of idea where we had a microcycle top, but it ended the day red. Just consider that. That could be helpful for everyone when you're utilizing this 247-day theory. Again, it's just theoretical. I know it is insanely experimental technical analysis, but that's what WatersAbove does. I do esoteric technical analysis. I'm bringing you a different way of analyzing these markets. So just wanted to recap this 247-day cycle and how off of this pivot right here over 247 days, we got our low wick, and we seem to have been getting a little bit of a buyback. And what's really fascinating about this is if you measure off of these lows right here up to this wick high that we get 6 days later, that's 23%. Now let's assume we actually moved up 23% off of that in the same amount of time. That'd be bringing us into 31,700 on a new microcycle top. Just consider that. It's pretty interesting stuff how we popped off of that pretty dramatically. And this May 18th date that I have on this dotted line right here, which is 247 days from this clear, shakeout. I mean, look, the candle was leading into a new microcycle top, and then we keeled over 9% in a single day. Pretty dramatic. And that led to the end of the Shemitah, actually, which is this little red candle right there. But I just wanted to bring up how this 247-day cycle that's coming up soon, in about 3 days, will be the day before the new moon. So you guys are well aware how the new moon works. We typically see 5 days around a new moon. We are leading into it bullish or slightly past it. We're pretty bullish. And leading out of the new moon into the full moon is when we have our short-term corrections. That's typically how things have been going time and time again. Of course, we have to be open-minded and utilize technical analysis alongside the moon cycle. You can't just rely on a lunar cycle. That's not smart at all. You try to use a couple of these metrics together, keep it simple, don't overthink it, but it's undeniable that the lunar cycle definitely plays a role into the energy of this market. I believe my work has proved that. So, just getting back to this 247-day cycle thing, it's clear that we have a match, and that's beautiful that we called out that date in advance, and now we're popping back up into this horizontal trading range that's been in place since March 17th. So we're 60 days in a horizontal trading range, guys. Nothing has really changed for Bitcoin. Nothing has become bearish just yet. It will start to become bearish, unfortunately, below 20,000. Until it holds its higher low structure, or until it breaks its higher low structure, we're in an uptrend. So just again, starting this off to be calm and to be utilizing just the charts and no emotions. We have a low, higher low, higher low. We have a high, higher high, higher high, higher high. We're still in a higher lows, higher high structure until that changes trend. We're still following the trend. And we can see very clearly that we like this 26,000 range, because that was the support playing for about 40 days until, well, actually, we'll just consider it this full 2-month cycle of about 60 days. That'll be pivoting out, I believe, on the 18th based on this 247-day cycle. And let's get into some of the dates so that we can make some sense of it all. Now, I'm going to quickly recap this because I've talked about it several times, but it's this May 17th date being the 137th day of the year. That's your 33rd prime number. And it's been 33 days since the April 14th top. I mean, this is pretty fascinating stuff. You guys know that April 14th into April 15th was the sinking of the Titanic ritual that happened 111 years ago. It's funny because we're on Red Pill podcast number 111, and we're going to be talking a little bit later about September 11th ritual and how that's all tied into this, and something to consider per the code. Just shows you how dialed in this whole this whole thing is. This couldn't have been planned out 2 years ago to happen on this day. You know, it's absolutely amazing. But getting back on track, I already talked about this 33 days connected to the 137th day and the significance of April 14th being the anniversary of the sinking of the Titanic. That's the date that Bitcoin thus far has topped out. So this will be 33 days since the current microcycle top. Now, getting into the following day, that's our 247-day cycle that I was talking about earlier, from this pivot right here over to here. And one moment. Okay, and then we were also discussing this connection of May 18th to the day that Silicon Valley Bank failed, which was 69 days after the 69th day of the year. So Silicon Valley Bank failed on the 69th day of this year. And it's been showing up a lot in Bitcoin's code lately because, well, Bitcoin hit 69,000 as its all-time high. So we have to be very considerate of that per the code. Now, just consider 69 days after Silicon Valley Bank failing on the 69th day. I would not be surprised if we have some sort of banking ritual leading up to the 18th, between the 18th and the 23rd. Now, this could potentially be maybe short-term volatility to the downside, but I think it will bode well for cryptocurrency, Bitcoin specifically. So just keep that theory in mind. If we are to have an event in banking again, I still think it's going to be positive for Bitcoin. I'm going to stick to that until my feelings change. I will let you know. But as of now, I feel like all of these banking failures are going to be super positive for Bitcoin. Will they be negative for things like exchanges? Absolutely. Will it be negative for potentially some altcoins? Oh, yeah. But when it comes to Bitcoin specifically, I don't think it's going to have much of an issue. Also, things like XRP, ISO compliant tokens, stable coins, I think will be fine through this for now. I personally foresee a stable coin issue in September through October, but that's another part of the story and we're not there yet. But just want to let you know there could be potential banking issues between the 18th through the 23rd. I'll be getting into some of these numbers in a moment, but for now, let's consider the date that Bitcoin hit that $69,000 target, since we're talking about this number 69 here and there. And that was November 10th. That was November 10th of 2021. What's amazing is if you connect this all to this date right here of the 19th, that gives you 555 days, that 555. Something to think about. Of course, this date was the 111 date, and it was on the 314th day of the year. And that 314 is pi 3.14 coming full circle. And of course, Bitcoin hit 69,000, which is just perfect if you think about it esoterically. So the reason I think this is pretty interesting is the 555 is 3 5s, and that gives you 15. And November 10th was the day leaving 51 days in the year, which is the mirror of the number 15, as above, so below. This number 15 was super negative last year when we were in the year of the tiger, and that's because tiger gives you that 15. Remember, I was telling you everything that's tied to the tiger or Jupiter or has the number 15 or the number 47 will have a negative performance in the year of the tiger. Now, if you pay attention to the movement on Hex has that 15. It lost about 94% of its value during the year of the tiger. You look at XRP, had that 15, again, had a very poor year in 2022. Now, ultimately, everything had a pretty poor year, but when you think about how that code specifically was tied into anything with Jupiter or anything with the tiger, other things that were not tied directly to it didn't have as bad of a performance. And this goes for the entire stock market. If you start looking into companies and their symbolism, it goes for crypto and the symbolism. It goes into specifically why Bitcoin did not have as dramatic of a fall comparatively to past cycles. So many other things to say. And getting back on track now, I'm just thinking a lot about this number 15 and how it's seemingly positive this year. We're no longer in the year of the tiger, we're in the year of the rabbit. So the 15 and the 47, which is the 15th prime number, not as much of a worry as it used to be. But getting back to that number 15, I just showed you some examples of where we're seeing it show up, such as Hex and such as XRP. And we know Hex just had the Pulse chain launch. That means that a lot of prana is going towards Richard Hart and the Hex ecosystem, obviously. A little less prana has been going to that Pepe coin nonsense. And I believe that this, let me take this step by step. This Pulse chain launch plus last week having this Pepe coin madness is bringing attention to crypto again. You guys got to pay attention to this stuff, this exoteric stuff. When it gets attention, it's opportunity for volatility. Now, volatility is your friend if you know how to play that volatility. So this is giving me feeling as to why we're about to head one more leg up and then keel over pretty hardcore. And I revealed that in my last Red Pill podcast when I was talking about meme coins, the Shiba Inu and Pepe analysis. I was telling you guys exactly how I see this playing out. And until we get to late June, we just have to let it play. So getting back to this, another connection for this upcoming May 19th, right here, is that it is tied to the first day of Rosh Hashanah this year. And this is into the end of Jubilee. Now look at this number connection we're getting. On the 19th day, it is 119 days over to the first day of Rosh Hashanah. And just consider that. You know, this 119 is the mirror of 911. We're also getting identical date numerologies on both dates. We could see the 67, 67, 22, 22. Those are the main forms of date numerology that I like to use, the double digits and the single digits before reduction. Now that 22, you wouldn't reduce anyways because it's your master builder, master destroyer number. And what happened on 9/11? You had a destruction to bring in creation, and it was a big ritual accordingly in New York. So I'm going to wait on that. We'll get to that in a moment. But one other thing about May 19th this year is it's Jerusalem Day. So speaking of the Rosh Hashanah, which is the Hebrew New Year, and utilizing the Hebrew calendar and the moon cycles, etc., we got to take this into consideration. Now, this changes every single year, but this year it will land on Friday, May 19th. So this allegedly commemorates Jerusalem's reunification in 1967, and I want you to pay attention to the 67 number because that is your date numerology on both of these dates, the 67 and the 67. Pretty interesting, eh? And then what does 6 and 7 add up to? 13. So lucky 13 on Friday, and this is also a Friday. Is this another way of saying Friday the 13th in a more esoteric way? I don't want to go there right now, but I do like this 119 connection. And we had last year a couple of 119 connections, and they were positive. So think about that, guys. This is your new moon. It was positive, and perhaps it's because it's the mirror of 9/11. 9/11 was the negative, right? You call 911 in the United States of America when you have an emergency. Well, the 119, the mirror of it, could actually be the positive aspect of it. So just playing around with the numbers and having fun, but adding our perspective to the energy of what the numbers could represent. Again, all theoretical, but as decoders, you have to be open-minded and apply these sorts of nuances to make more sense of the code. So just a full-blown recap. We have Friday, May 19th connected to Friday, September 15th by 119 days, the mirror of 9/11, both sharing the same date numerologies, and May 19th being your new moon and Jerusalem Day. Alrighty. So you could see there's a lot going on this week already. And also, one other thing to mention is the year 1967 was the Hebrew year of 5727, which adds up to 21. And of course, this is tied back to Saturn with the 21s. This is all Saturn cult. The Shemitah is a Saturn year, and this year of 5727 was the year after a Shemitah. So remember, the year before, the year during, and the year after a Shemitah are always really powerful because everything works in threes, as 21 adds up to 3 when you reduce them. But just, getting really, really esoteric here. I want you guys to consider all of this stuff because remember, we were just talking about 9/11 and the 119. Well, the 9/11 ritual happened in 2001. It was, you remove the zeros, it brings you back to that 21. And 9/11 was a Shemitah year. Again, a Saturn year. It's a Sabbath year. Bitcoin hits 69,000. Saturn equals 69. It's all coded in to this. So now let's actually go to the date of 9/11 and show you some interesting things. 2001, and then we're going to connect it to this 9/11 this year, and it is 22 years. Now, remember before I was just showing you how this May 19th that's coming up has a 22 date numerology, and the first day of Rosh Hashanah this year to end the Shemitah is a 22 date numerology. These 22s are massive, all right? And we're about to have the 22nd anniversary of 9/11 coming up this September, just shy of the end of Jubilee and leading into a time frame September to October, specifically the October solar eclipse, where I think we will have a very serious ritual. And this is the eclipse I'm talking about right there. So just wanted to show you this 22 connection to September 11th, the 9/11 date. Well, in the Gregorian system, at least, it is 9/11. And during this time, actually, let me back it all up here. Let me get back to May 19th. I think it's important now because I just wanted to show you that quick little piece of information about the 22-year anniversary of 9/11. Hope you are all having a beautiful, beautiful day, by the way. Love you guys a lot. All right, so we're back here at May 19, 2023, coming very soon. We have that 22 date numerology, as I was talking about moments ago, and this time frame of May 19th is both tropical and sidereal Taurus. So in the tropical system, we're still in Taurus as well as sidereal or Vedic. Taurus, of course, is the bull. Taurus fields, right? So the bull, very important. We are talking about money, crypto. We're talking about currency. Taurus is tied to finances, ruled by Venus, which is Eosphorus, which is the light bearer, the bearer of light, currents, currency, frequency. This is very esoteric, and I think considering sidereal is quite important here to not overlook it. And just to discuss how, no matter how you look at it, whether you're looking at tropical or sidereal, when we're discussing the May 19th date, it is still Taurus. And talking about that 22, and Taurus equals 22 in Chaldean. It also gives you that full 100, which is a very powerful number. That's the completion of currency. We work in currency up to 100, and then it becomes the dollar bill. 100 cents becomes a bill. They call it cents. You have to make sense. You have common sense, right? You have sensory. I love the wordplay. Now, getting back to that Taurus 22 connection and the fact that we have that 22 on a Friday. Remember, we were just talking about how Taurus is ruled by Venus. Let me just show you that really quickly for those of you that are newer here, maybe newer to my work, and you want to know a little bit more. You could keep this super simple. Just go to Wikipedia. You can see Taurus, sign ruler right there, Venus. But let's just discuss how this Friday is a Freya day or a day of Venus, Venus day. Important, guys. And it's also your 19th, like Taurus gives you that 19, like Taurus gives you 22. You have that 22 right there. Also to the date that I was discussing earlier. Absolutely wild connections that we're getting for this Friday, the 19th, this upcoming Friday. Super important date. I just wanted to remind you guys of that, how important this date is by the code. So while I was making this decode, I reminded myself that 9/11 is actually the date leaving 111 days in the year. And this ritual, of course, happened in New York. You could see that 111. So I thought about the number 111. Of course, we're in Red Pill Podcast 111 right now. And noticed how this September 11th date is connected to May 23rd by 111 days. So let me show you that right here. Now, you want to play off this code a little bit, all right? So you have this upcoming 9/11 date, 111 days left in the year. 111 days before this date is May 23rd, being the day that leaves 222 days left in the year. You add both of these together, you get the 333. That's the ascension number. That's what I call the ascension number, at least. And it's told to you exoterically through the Christ story of being 33 years old, dying, resurrecting 3 days later, the 333. 333 adds up to 9. 9 is a number that's it basically is the number that's tied to the ego, because 9 always comes back to itself. But not going too off the rails here. I just wanted to show you that connection because I've talked a lot about May 23rd and May 22nd, and I did not include that little piece of information there tied to 9/11. At least I don't remember if I did. So remember, this is going to be the 22nd anniversary of 9/11, 111 days left in the year, going backwards 111 days to the 222nd day of the year, the 222 tied to the 22nd anniversary. Massive, all right? And as I said, I would not be surprised if between the 19th of May or the 18th, I'll just say the 17th through the 23rd to give it a nice chunk of a window. But I really feel weird about that 19th date and the 23rd. So I still think overall it's a new moon. It should be positive for crypto. As for the traditional markets or things that are tied specifically to some of this stuff, we don't have the time to get into that in today's video. It would require way too much decoding. So I've been talking about May 22nd and May 23rd for a long time now. So this is just another big connection to the dates. Remember, May is the true third month in the system. You would have March being the first, April being the second, May being the third. So this date of May 22nd is the 322 date in the 223 year, as above, so below, mirrored. And this 322 date would be on the day leaving 223 days left in the year. Crazy. So this is a massive connection to the 223 or 322 skull and bones number. And now we're aware that May 23rd is exactly 111 days leading into September 11th, which is the 111 days in the year. With this 111 code, I was reminded about how I used the same code back in 2021 based on the start of the Shemitah on September 7th of 2021. And I actually want to show you this. Now, if anyone is new here to my work, this might be a little confusing to you, but just bear with me and we'll show you this step by step. So what I'm talking about is this moment right here. I'm sure any OG wolves that have been with me for a while remember this date because I got interviewed by 3T Warrior Academy and leading up to this. And then when that moment came and went, people were absolutely blown away about how this code works. And it was something I revealed to people a while ago to anticipate this jump into September and then a noticeable correction to come on the start of the Shemitah. It's exactly the way it happened. But let me just show you something that I noticed after the fact. And this is what helped me start to utilize these so-called angel numbers in my system. If you go back from this date right there, 111 days, you're going to get to this day right there, which is May 19th. All right. 111 days, the May 19th date, and May 19th, we saw a major correction on Bitcoin. It lost 14%, but if we were to measure the complete candle top to bottom, it was a 32% correction in a single day, or around 30%. What's even more wild about this is 111 days back onto this exact date of May 19th, and this crash came in and stopped exactly at 9:11 a.m. Eastern Standard Time, the time zone of New York. Again, we're talking about 9/11. We're talking about Taurus, the bull. 9/11 Eastern Standard, New York time is when this stopped. Basically moments into the stock market opening up on that Wednesday. So wild, this 111 connection. It was something we started playing with a little bit more when that came to fruition. And I saw a couple of other examples. So 77 days back, you have this day right here. I don't know how I remember this. This was a while ago, but my memory is very sharp when it comes to this. But you have from September 7th, which remember, sept is 7. So September 7th should actually be 7/7. And you go back 77 days, and that was the exact low in the Bitcoin microcycle at that time. Mind blowing. Okay. We saw many iterations of these power numbers master numbers, angel numbers going throughout the entire Shemitah year. But so I just want to remind you guys of that. I think that's pretty fascinating how 111 days back from this date, it's bringing you into the 23rd, again, adding even more data. So during this time, we will be in tropical Gemini, but still in sidereal Taurus until June 15th. If any astrologers are tuning into this podcast, please feel free to share your thoughts on what you're seeing in your charts. If you're doing astro charts, I'd love to know what you guys are cooking up. It's great that our community is full of so many talented people that do other things, that have other forms of decoding, and I welcome it. And I'm so grateful to have you guys with us. So feel free to share that information in the appropriate text channels in our Discord, and I will definitely check it out when I have the time. So let's skip through this, but just wanted to give one final recap on the automatic rally idea. And it comes back to these two moments in the charts of 2019, right here, where we topped out into June 26th, and then right here in 2016 when we topped out on June 18th. And if you were to consider the window of time from new moons or full moons connected to these tops, it would bring us to this year sometime around June 12th through June 26th. And this year in June, our new moon is the 18th. We did not finish the automatic rally on the new moon in either of those cycles, but we were within a week on both sides. So this is why the window is so important. Now, June 12th through June 26th is a lot of time. That's essentially a month from today. So a lot could happen in that short amount of time. And if you go back to any altcoins during that moment, you can see that they had a sharp rise. Most of the time only lasted about 14 days. Some of them had single day gains of 50%, 60% in a single day back in the 2019 cycle. So this is definitely a time to be considerate of a massive volatile injection that could come out of nowhere. But you guys, it's not going to be shocking to you because you've been prepared for this automatic rally concept for so long. As for where Bitcoin is, it has not given us the same gains that we've seen in prior iterations, but thus far it's still done what we anticipated of moving up into these eclipses. On the other hand, Ethereum has finished its automatic rally according to what it did in the last cycle. So that has everything to do with, let me turn off all this noise that I had on while I was doing some analysis earlier. If you look right here, I'm just going to show you, and this is not new to anyone. I've talked about this probably 20 times now. But if you take a Fibonacci from the all-time high of 2018 down to the swing low of 2018 1 year later, you could see this automatic rally ended right here at the 0.5 fib. If we do the same thing in this cycle, it perfectly came into the 0.5 fib. Now, that was another reason why in my last video that I put out, I talked about this concept of $2,000 ETH, because if you pulled from this high to this low, you get into that golden pocket territory. That is exactly what it did. The same thing happened on Bitcoin. With Bitcoin only coming up to 31K, that is not and that's not what is expected for a full automatic rally. You would at least anticipate over the 0.5 fib into the bottom of the golden pocket. And in both iterations of Bitcoin's automatic rally, it came into the top of the golden pocket at the 786. Okay. So I'm just saying this now because I don't want to repeat it later in the Bitcoin analysis. I want to keep the analysis fresh and work with what we're actually working with in real time. But I just wanted to get that out there to discuss some of these ideas around the automatic rally, how it's still possible for us to take one leg higher, and the window of time to get that push. Okay. So now let's go into the Dow. We are usually doing these on Sundays, so it's while the traditional market is closed, but I actually like how the market is open right now because I was anticipating May 15th to be bullish. It's really funny. I got a lot of people who are astrologers who study astrology and follow other astrologers, and they kept pushing to me, Waters, like all these astrologers are saying May 15th through June 5th, like second week of June, is allegedly very bullish in their analysis. And I'm like, that's really interesting that I'm hearing that now. because ever since I made that World Reserve Decoded, I became very open-minded about the month of June, as you guys are well aware. I came out with that as a follow-up because I didn't want to settle on one bias. I didn't want to get super biased. I wanted to be super level-headed and look at it. I was essentially trying to find flaws in the sell in May and go away decoded, and we totally found some. But technically, we did top out leading into the April eclipse. We just need to see how this month of May continues through June, because June is a surprise. I don't know why. It just seems to be a very wild card month. And I know anyone who does astrology probably has some extra information they could tell the community about. And like I said moments ago, I would love to have that data. So feel free to share. Let me just get a quick sip of water before I move into the analysis today. All right. So we're about 40 minutes in and we've already covered so many things. I hope you guys are taking notes. Now we're going to be reviewing the Dow Jones. So much to talk about with this chart. I don't know when the last time we analyzed this was, but I just want you to look at some of these trend lines really quickly. We have this red trend line, which was clearly marking up until November 22nd, a lot of these rejection points. And then after the 22nd, we broke through it leading into the end of 2022, and then we back tested it to confirm it as a support. We got another lower high, which doesn't really mean it's a positive support, because we went another leg lower into March. You guys remember this moment right here. That was when Silicon Valley Bank failed. That was when Bitcoin traded into 19,000 really quickly, and then boom, just popped out of it. Same thing happened with the Dow. Now, the Dow actually had a lot of choppy activity into the start of May, and now I want to go to this other trend line that I have drawn here. Again, I am in logarithmic scale, and I have this trend line drawn out from the current all-time high on the Dow Jones up through this rejection right here, which you can see is clean on December. Then we have a couple of rejections, multiple rejections into February, multiple rejections into April. We got a little bit of a bull trap energy happening on May 1st, like right in the beginning of the month. Then another rejection. Now I'm gonna tell you for a second, do your best to disregard these trend lines. And now I just want you to look at the fibs. If I zoom in, I think it could be a lot more helpful. Okay, so we have from this swing high right here to this swing low, a regular Fibonacci retracement. And we have what would be considered in a microcycle, this would be your buying climax. You can tell that this is a buying climax because look at the wick on this. Mamma mia, like huge wick on a indice. This is like something you would see in a crypto. And it instantly fell pretty much for a whole straight trading week by about 7%. Okay, so this definitely has the energy of buying climax. And since we have not gotten higher since, that is the current higher high, then that's confirmed a buying climax. Now you have down here this exaggerated sell-off into March 15th. So this would be your selling climax. You have your buying climax up here, which is considered everything that happened here in November into December. It's just this finality of testing highs to see if we can go higher, and it did not come to fruition, led to a rejection and a sell-off. So here you have your selling climax, and naturally after a selling climax, you have an automatic rally. And that was your automatic rally, and it came up perfectly into the golden pocket. Okay, so this is the completion of an automatic rally, in my opinion. We made it all the way up to almost the 888 fib. That's insane. That's like what a crypto would do. So the Dow is really volatile, like seriously moving lately in the past 2 years. The more I do analysis on this, I'm noticing that the traditional stock market isn't as sleepy as it might be perceived as. As an analyst who's looking at the charts, this is very, very choppy, very unsophisticated trading energy going on. This is showing me it's a lot of speculation, a lot of leverage, a lot of like quick ins and outs, swing trades. It's like it's losing its old school essence of buy and hold long term and look at it as a long-term plan. Anyways, of course, this is just an indice, so it's an average. But getting back to this whole Wyckoff analysis, buying climax, selling climax, automatic rally, complete. Now, when you start to really know that this is the end of the automatic rally is when you start trading below the 0.5 fib. And we traded perfectly into it, got a little lower, and you can see closed above it on the daily. Then we had this big green candle to follow, and now we're kind of choppy between the 0.5 fib and the 0.618. And usually what you anticipate next is a run down to the 236. And I am now wondering how this is all going to go because of where it's trading at comparatively to the NASDAQ. So I'm just going to give some quick words of wisdom now that I'm here. I'm going to pull up this. 1 second. Okay, I just want to make sure I'm not missing anything before I move over to the NASDAQ. All right, so we've been trading below some of our key moving averages, but we've gotten a back test on the 200 exponential and 55 simple moving average multiple times, holding that. That's looking good. What you would want now is trading above these key moving averages, especially above 33,500. I would want 33,600 actually. And we could pull a Okay, one moment. Yeah, we could just pull a micro fib, and yeah, I would want to get above 33.6 like I just said moments ago, and you could see clearly that's the 0.5 fib. Getting above that 0.5 fib would be good. But turning off all these drongs and just looking at the moving averages, this is looking pretty good. I mean, we've dumped below the 55 back in February, and it led to a very dramatic sell-off. But here we've actually held the 55 as a short-term support, and it could be because the 55 is now kissing this 200 exponential. And the 200 simple is sloping to the upside. We can see the RSI kind of about 46 at the moment. It's not completely shitty looking. But again, this is a very long-term horizontal trading range going back to exactly a year ago. Pretty much we've been chopping in this general range around 31 to 34 for a year. 33,000 points seems to be like its average of where it likes to hang out. Okay, 1 second. Now I just want you to look at this structure, and then let's specifically this structure right here, and now let's go to the NASDAQ. Boom, totally different essence. So let me show you what's going on in this. This has been a much healthier uptrend since the beginning of the year. You could see we had a nice rally into February, a pretty decent back test into March, and then now we've been on continuous higher highs in the micro. Now, NASDAQ is typically more tech stocks, more innovation. You're going to have a lot more of the new age technocratic world order shit going on with these things, with the NASDAQ. But needless to say, we're not even going to discuss that. We're going to just go into the technicals. So actually, let me look at any trend lines, anything. Okay, beautiful. All right. So we have here, we're looking at this in logarithmic as usual, and we have this rejection point right here at the pretty much all-time high. Clear automatic rally vibes going on over here on this rejection, and coming pretty deep into another leg lower in October. And then ever since we had the transition into the new year, we broke above this trend line, and we back tested the 236 fib. And right here when we made the next leg higher, this is like moving into an automatic rally, essentially. So it's catching up to the Dow, as opposed to the Dow did this completion a little bit earlier. This is now catching up. And it kind of makes sense because there's a lot of volatility here as well. Similar kind of choppy, wild energy. I just like the way the I like the NASDAQ chart a lot more. I had this 13,700 marked for a while, and it has to do with this horizontal level high. So we're gravitating into that. And if we start to close above that, then you want to consider the golden pocket range is next. And this looks perfectly like a setup into June. So just keep that in mind. That could bode very well for crypto as well. Again, tech, innovation, blockchain is the future, economy, etc. You guys have heard this narrative. But just consider this could be a short-term W. I believe we're probably in the process of moving into somewhere around 13,500, playing around with this prior peak. And if we could clear that level on a 3-day, 5-day closure, weekly closure, I think the next place to anticipate the NASDAQ is moving into 14,000 points. Yeah, potentially even that 702 fib. So now let me turn off all the drawings and just look at the moving averages. This is beautiful. All right, we continue to ride the 8 simple moving average, higher highs on most closes. We have the 200 exponential, 200 simple, and 55 simple sloping to the upside, positive. All key EMAs moving positive. EMAs are in bullish posture where we have the 8, 13, 21, 34, 55, 200s. Gorgeous. What more could I say? If we continue to close green candles, you can't complain. Let me look at the 3-day. Oh, okay. Then we got a little sign there of why we've made it up to this 1337 and have had a couple of days getting a little bit of a rejection energy. And this has to do with the 3-day 200. I don't really care to do 2-day analysis on stocks. I do it on crypto because crypto trades 24/7, 365, but I skipped over to the 3-day, and I'm glad that I did. We can clear this 200 simple, and that would be incredibly bullish because the last time we did that was on this essential automatic rally at the time, which led to a spring. Yeah, this is like actually how I would analyze this: buying climax, selling climax, automatic rally, spring, and then this is in your process of a SOS, sign of strength, which would come into 1430. Now, I don't want to look at it necessarily like that because I am super bearish in September, October. So, I really think that we could keel over below 10,000 points in October. But I'm just telling you based on the structure we're looking at right now. If I had no future analysis pending, yeah, that's how I would look at this. But clearing that 200 simple would be very positive. Clearly a key level. It's a level that we back tested back in the C19 crash, bounced really nicely. We bounced off of it in 2018. You can see we pretty much rode these 200 simples all the way. Fuck. Wow, guys. So I just want you to take a moment to look at this. I'm going to turn this off and just show you what's going on here. I'm glad that I looked at this. So, okay. This is your dot-com bubble crash. This is your housing market crash. This right here is your C19 crash. It was very quick. But I just want you to pay attention to this market structure right here and how it's almost similar. How we have this closure below the 200 simple, 200 exponential, and the 55 simple right there on October 2008. And we had this similar thing come in around here, this rejection off of the 200 exponential, 55 simple. And when we recovered over it and we started to have the 55 cross above the 200s, we rallied pretty damn hard. The same thing happened here, guys. So I just want to let you know we're not in that posture right now, but in the future, when we have this 55 cross above that 200 simple, oh, damn, get ready for your finality of the next bull run. And I don't see that necessarily fulfilling for the stock market until maybe 2026. I think Bitcoin, it'll be next year at the end of the year. So probably you'll start to notice that by November of 2024. You'll start to notice like a dramatic parabolic crypto bull run. I don't think it's going to be 2025. And if it is, it'll be Q1 2025. It'll be probably over by January into February of 2025. But the stock market, yeah, once you get this cross right here, you can anticipate a long-term rally, at least a couple years. But I do think that potential into 10,000 NASDAQ is in the cards. So we're going to see how this all plays, but I want to let you guys know that these are some of the markers that I'm looking at for potential final leg up into June. It could be a 14,000 point NASDAQ, and it could be a potential double top test of around 34,200. But so far, the Dow has done what it needed to do. And I think the S&P is looking pretty damn similar. So really not much of a story going on there. I hope you guys enjoyed the technical analysis on the traditional markets. I think it was important for me to cover, considering that this is the post-eclipse special. And I wanted to add just, a little bit more to this. Ooh, I think gold is pretty much, yep, gold and silver doing, okay. I don't have the time to get into this, guys, but I did not notice on May 11th a 5% correction on silver. Holy moly. Something must have happened isolated to the silver market because it did not show up in gold. Very interesting. Maybe in a week or so, we'll recap on the precious metals, because as we approach this time frame, I think specifically September, October might be a very good time to consider having precious metals in any capacity. I don't know how it would be best for you, but it could be an important part of a balanced portfolio. Okay. Let's get moving on to Bitcoin, shall we? Bitcoin analysis post eclipses. Put this chart up and let's look at tab number 2. All right, it's been some time since I've gone over this chart with you. I know a lot of you were anticipating me to review this, and we went over it. I forgot what Red Pill podcast it was, but this is all of the red boxes are when Mercury is stationed retrograde. These vertical lines here are the eclipses, and it's marked from January 2020 over to today. So this includes that C19 crash, and I marked all of them. And when you see these little numbers above the Mercury retrograde sign, it's telling you the percentage move that we made during Mercury station retrograde. And now I just summarized all the data for you right here, saying that about 55% of the time Mercury retrogrades are neutral during, and 67% of the times Mercury retrogrades are negative. Now, I know this isn't me trying to confuse people necessarily. I'm just saying that more times than less you lose value on the price, but it's essentially neutral. It's pretty neutral. Now, just to quickly go over this part, price peaked before all eclipses and around a new moon, and that's exactly what happened this time. We topped out before the eclipses on April 14th, and it was right before this moment right here where Mercury was stationed retrograde during both of the eclipses. Pretty rare time. The only time we saw this happen close to this was right here in this iteration. Now, why is that so crazy? Well, it's because we topped out on April 14th of 2021. So this is like as cyclical as it gets. Now, through May 19th, that was the deep crash, and then we popped up pretty dramatically. So if I was to take off of this crash date and show how much we popped up, that was 40%, guys. And we were trading at a higher price. So imagine we popped up from 40% up here. Bitcoin would be at 36,000. So I'm just saying, something to consider. Now, in this iteration, I want to zoom in and show you what's up. So during Mercury station retrograde so far, I guess it stationed direct as of yesterday. So we're going to go from the candle on the day it started to the day it ended. 1%, barely anything. So this would be considered a neutral example. All right. Now, if we go from high peak to lows on the sell-off, we lost about 16%. So if you want to analyze it that way, it kind of fits into the traditional theme that Mercury retrogrades are negative more than positive. And after we have them, we still tend to have very dramatic rallies. In some circumstances, one would be right here where we had an overall negative Mercury retrograde, but we still popped up pretty nicely. Here, popped up pretty nicely. Here, we went up definitely pretty nicely, even into a microcycle top before rolling over again. And let's just consider this example right here as kind of a wild card, because I do not have every single Mercury retrograde mapped out forever. It would take me too much time, but it's just having fun with the data, and 3 years of doing this is enough data when we're talking about crypto especially. So I hope you guys enjoy this type of analysis. Again, Mercury is tied to finances through being what I call the god of fiat money created out of thin air, which is exactly what blockchain is. Blockchain is just fairy dust. All right. Now, I know we are in it. We're focused on it here, but it's because we see the opportunity in it and we're not worshiping it. It's not the cult of Bitcoin or the cult of Hex or the cult of XRP. That's all bullshit. You got to wake up. In order to become your best self and to become the self-reliant man, you must break away from groupthink, and you must think clearly about your position in all of this, especially when it comes to belief. All right. Please be aware that crypto and this technocratic future has nothing to do with sovereignty or your well-being. It has everything to do with installing a new control element for the masses. So please, 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 remember what Chief Wolf is all about and what the Wolf Pack is all about, which is creating self-reliance, utilizing our intuition, discernment, and not joining this groupthink, cancer that has taken over the mind of man. It's very, very important. And that goes for people that are into astrology, into numerology, decoding with Gematria, whatever it is. Always continue to ask questions, always continue to expand consciously, continue your search. These are the words of wisdom that need to be repeated over and over again as we utilize these concepts. So getting back on track, this Mercury retrograde thing seems to be a player in the game. And now that we have left this, could be pretty solid. And one other thing to say about my research of the astro charts, tropical, to keep it very simple, we have a lot of planets in Taurus very soon. I believe on the 17th, we have Jupiter in Taurus. Now, Jupiter is considered in astrology to deal with expansion. Some people consider it to deal with good luck. And that's been an interpretation that I've heard from several people. My take on Jupiter is when we're not esoterically tied to Jupiter in that particular year, whether that year is analyzed through Gregorian or Hebrew, I think that it's just about luck, and luck works both ways, right? When one person's lucky, another person is unlucky. And that is exactly how stocks and trading and all of this investment stuff works. You're essentially selling to somebody who's buying from you, right? And when you sell at a so-called good time, it's because there's I don't want to say it to be negative or judgmental, but it means there's a sucker on the other side who's taking your dog shit and handing over to you wealth. When you panic sell at bottoms, it's because you have weak hands and you let your emotions get the best of you, and you're essentially handing over your gold to some more intelligent person. So just think of it that way. That's how trading and this whole market works. If you think it's anything more sophisticated than that, then you're missing out on the basics of how investing actually goes. So just want to explore some of this stuff today, explore some of these ideas and go back to the basics, because sometimes we forget about it when we are tunnel visioned in whatever it is that we're particularly practicing, whether that be chart analyzation, trading, focusing on a particular blockchain ecosystem, whatever it is. Sometimes the basics need to be reminded, not only from the investment wisdom, but also the analysis, and that's what I try to bring here. But let's just consider that this is all out of the picture now. We are in a different energy, and I'm still feeling pretty good about the finality of this month. And I just want to review this chart, show you how this all went down. Now, let me check out a couple other charts. We went over the 247-day cycle, moving into the the day of April 12th. Okay, so now it's a good time for us to just analyze how this weekly close went. Actually, did we have a bi-weekly? No, we did not. Okay, we had a weekly close. Weekly closed below the 8 symbol moving average, not good. And we held support on the 200 symbol, so that's fine. Now, I just want you to consider that we have not been above the 200 exponential and 200 simple since a year ago. Now we've traded above it as of March 13th, and thus far we've backtested it finally. So that's very nice to see. The fact that we're backtesting something that was a previous resistance, you could see it showing as a resistance definitely there, but closing below it on June of 2022 is what led to more continuation to the downside on two legs lower, excuse me. Broken English. But we talked about this wolf cross of the 8 above the 55 on the weekly, still looking good, but I would like this 55 to flatline, and eventually you can't consider it fully bullish until this 55 starts sloping to the upside. So again, still in this automatic rally energy of having a bull trap, just going up a little bit, keeling over. But we really need to start closing back above 30,000. And on the weekly, you could see that it's clear the high level is 30,300. I know I talked about the level of 30,600 on daily closes, but yeah, if we could just get back above that 30,000 area, I think that would be a huge sign that we've had a clear technical backtest around 25,000, and then that was just a backtest to confirm support. Now, let's look at some of our other time frames. We have the 5-day closing tonight. Okay, so we see this 5-day closing. Sorry, let me just make sure. I'm going to zoom in a little bit for you guys to make this really clear because this is important. Ooh, okay, perfect. We backtested the 5-day 21 exponential. We're holding the 200 exponential. And if we can get above that 13, that would not look as bad. All right, I would like us to hold this 200 tonight. If we can close above 28,000, that'd be really nice. Now that might be asking a little too much because that would be like a 4% close on Bitcoin. It's possible though. It's plenty of time in the trading day. So just please keep that in mind. But ultimately just getting above this, the 13 exponential, which would be 27,600, $100 from here. That would get us back above all of our key EMAs. So the EMAs we're using are the 13, 21, 34. If we could get above the 13, then we're closing. It's pretty solid. And it will maintain the upward angle on the 21 of the 34 and the 55. So all good in the hood. And we see that the 5-day is above 50 RSI. So that's looking good as well. Let's go to the 3-day. Okay, 3-day closes tonight. 1 second. Okay, so we have a 3-day and a 5-day closure tonight. Very, very important. And getting above, okay, so what we're dealing with right now is starting to make sense to me. We have this 21 exponential and 200 simple kissing each other, and that's really that resistance point, which was the prior horizontal trading range lows in the range. Yeah, I would really like to get above 28,000. That would really make me feel a little bit more confident. But right now, this is not, this was a pretty dramatic 3-day close on new lows. Yeah, so I would like to get 20. I would like to get a continuation candle, which in my opinion would be just closing higher than this prior candle on the 3-day. Closing higher than the open, so that's 27,700. We're talking about a $200 difference here. So really, if we could get above 28,000 tonight, that'd be gorgeous. I think that would really be positive. And there you go. So 28,000 sits you right on the daily 34 and 21. Yeah, so you all know about the Wolf Cross. We got a Wolf Cross that came in on May 10th, led to that lower. One moment. Okay. Yeah, anytime you're getting these Wolf Crosses in either direction, you anticipate that direction to come to fruition. So if you have a 8 symbol cross below the 55, you have a sell-off. If you have the 8 cross above the 55, that's a continuation move. You can see that right here. You can see the yellow cross above the 55. You can see this right here. The yellow cross below the 55, sell-off. Same thing here. Same iteration. Very similar energy too. 63 days, mirror of 36, 3 6s, Bitcoin's 36. Just throwing things out right now. Interesting. I haven't done actually any full analysis on it because I had personal stuff going on over the weekend, so it wasn't important for me. I had to take care of my life, but I'm now seeing that this has definitely started changing in energy, but it's bottoming out. And that 28,000 would be a very, very, very key level. If we can do it within the next 48 hours, I'd feel a lot more confident on Bitcoin. And then ultimately, if we could pop above that 55, we're good. And you can see clear as day here, these rejections on daily closes at 29,600. We're really talking about 7% up from here. And if you look at this back test that led you into the lows of May 19th, we had we jumped 30% in 3 days. Damn. I mean, if we were to go 30% off of this, just off of that low, that would be bringing you into 33,000 Bitcoin, man. And that's not even the whole rally. That's just the beginning of that next leg higher. So yeah, I do think we're going to get just a random volatile day. I wouldn't even be surprised if it's the 17th. I've talked about the 17th so many times. So, okay, guys, on the downside, if we start to close on new lows, that would be 26.6 or 26.5. I expect to move into this 200 exponential at 24, let's just call it 25,000. 25,000 flat is in the cards if Bitcoin wants to have one more shakeout, and then we could still be bullish if that's the case, because we have this 200 exponential sitting here, and thus far the macro time frames don't look that bad at all. But now in the short term, if we could get above 28,000 on tonight's close and we could start getting this 50 RSI or higher, I think we can call this the backtest, considering this 247-day cycle that we talked about. Okay, so we're going to move on from this analysis and get to Ethereum. We're going to skip through Ethereum and XRP pretty quickly because there's not a whole lot to update. We gave you guys the numbers about this top to the correction and bull trap theory, which came to life. We saw ETH hit the 2000 range. Then we went one leg lower in this, but we are still holding this horizontal trading range, going 60 days now. Similar thing to Bitcoin. Now, what I would like... Okay. So taking a fib from this current high to this current low, we can see we're trading above the 236. I like that. And then we could definitely rally right back up into this 0.5 fib area. So anticipate if we can close above that 55 simple moving average, which is on this 382 right here, you could have a $2,000 Ethereum one more time, but that would require Bitcoin to get back to like 29. I think Bitcoin's really stealing the dominance right now. Yeah, it's really like holding on to its 48% in the year where Satoshi Nakamoto's 48, right? How weird is that? Coincidence or code? I'll let you guys decide. So yeah, really not a whole lot to say on ETH. It's pretty much the same exact concept as Bitcoin. If we close below 17,090 or 1790, 1,790 to anticipate a move to fill out this wick into 1738. But really that 200 exponential sitting right there at the 382 is what's to expect. Now, if we start breaking below this 200, that would be I would really call this the automatic rally. It would confirm it even more. So we just have to be chill right now and see how this all plays out, because for sure ETH did what it did in the 2019 cycle perfectly. Let's just hold that trend line there for now and see how that goes, because I could totally see something like this happening. Just pop over, boom, and then actually have one more move into this top trend line, and even that would be a double top. And I've seen automatic rallies end on these double top moves before. That's really shady, but it's happened. So we got the downside target, upside target to consider. And now for continuation, if Bitcoin was to start trading above 31,000, I think the next move to anticipate is 2,400 for ETH. 23 to 2,400 would be your next leg up. And I really don't think I could see it going much higher than that. Let's go to XRP. XRP, it's amazing actually that it traded into this 200 simple, because if you guys watched the last episode, you'll remember that I talked about this right here. So we went all the way back to this fractal, and I showed, you see this white moving average crossing above these, this white moving average crossing above these 200s. Actually, it was on the 2-day to be completely accurate. It was right here. Boom, boom. Let me turn off these EMAs. Let me increase the size. And then we have right here, this fractal is very similar to this fractal, and it has everything to do with this cross right here of the 55 simple above the 200 simple. This happened right here, right there, same. And it's the first time this cross is happening in 950 days. And what it led to was chop and then blast off, and the chop held support at the 200 simple. So you scroll into today and you see the 2-day candles keep holding the 200 simple. So it's just something to consider. And I talked about that 42 cent price target in advance because of this concept, because of this analysis and this fractal repeat right there to right there. So we're going to keep it at that until we saw this 8 simple cross above the, oh, it happens so quickly. It's really hard to it's hard to, okay. Really, what would be ideal is this 55 simple to cross above the 200 exponential, and then this 8 simple to start curving to the upside, because that would be the true posture you'd want it in anyways. You'd want the 55 or this white moving average to get above the 200, and then you would want the 8 to be above all of them. And that would really be where it's in bullish posture and when you would anticipate the next move up. And if we were to show the fibs, it's clear that the next move up is your 0.5 fib. It would be around 75 cents. And we've talked about this 83 cent target to 93 cent target many times, and the idea of an upside wick to $1. And it could all happen very soon. And if we were to take off the move that if we were to look at days, is about 114 days after this cycle top. So if we go from this cycle top 114 days, it's a little bit extended, but just gives you an idea. It did happen into about July. But I want you to look at the automatic rally that happened in the last cycle. We have from this swing high to this swing high, and we only made it up to about the middle of the 382 and the 0.5 fib. Now, in this situation, it would be about 70 cents if it was to repeat. So we just have to be, a little bit cautious about where this XRP move could be. Of course, in this cycle, we had a massive rally that led into this sell-off. We had a rally that was, 60,000%. So the fact that the automatic rally was short-lived and not a huge run, it's kind of making me feel like this run, because we're so suppressed, could be a little bit more impressive. And that's where you'd want to consider somewhere around the 0.5 fib to 0.618 into 83 cents to $1. So I think this is a good time to actually move on to Hex. And we're going to review a couple of tweets that I made. You guys know I'm new to Twitter land. But one second, I'm just going to set this chart up for you guys. And we're looking at the all-time chart of Hex. We got all the data going back to about May 2020. And you guys have heard me talk about this several times, so it should not be new to you. Let me review the exact moment. All right. So we have this right here, and then we have this recent one that I shared. Boom. And it was this. So essentially, back on March 21st, I made this shout out to the Hex community about the 10-cent target moving into my ultimate target of 12 cents, which was marked out right there. And I talked about this publicly on an interview with Crypto Coffee. You guys probably remember that, especially if you're in the Hex community. And then I came out talking about this, telling people I hope they took that call out seriously, and that now Hex is closing below the 200 exponential. And the RSI is still not oversold, so that was insinuating that there's a move to the downside. And I talked about that 12-cent call, and I mentioned this, all right? And a lot of people didn't like this. A lot of people got very mad that I said this, but I said I know a lot of you are long-term with this asset. I'm well aware that a lot of you are stakers, and I always promote a long-term investment thesis, of course. That's what I'm all about here. But Hex is most likely heading to 3 cents. That was all I said. And it was based in the TA. And I wrote, if it can't hold 0 to 4 cents, to anticipate a double bottom. And I said, this is not FUD. It's just how this market works. A 2-cent Hex this year is possible. It traded to 0.22. And I'm aware Pulse Chain launched recently, just a couple days ago. So now there are essentially 2 versions of Hex. There's one on Ethereum and one on Pulse Chain. Essentially, it's a stock split. Now, I will not be getting into the details of Pulse Chain and Pulse X. I know that there's many channels that are dedicated just to that. And as you're all aware, I'm an esoteric technical analyst, professional trader, decoder. So that is my unique skill that I bring to the table. But For more info on Pulse Chain and the Hex ecosystem, I could refer you to Crypto Coffee, who has invited me on his show several times for podcasts. He's the Hex expert. I am by no means an expert in Hex. I'm not an expert in any individual crypto. I'm just a technical analyst and decoder. So with that out of the way, today we'll be recapping this recent move in Hex with this chart that has history going back to May 2020. So we have exactly 3 years of data. I talked about the automatic rally concept way before it actually happened. If you followed in the interviews that I did with Crypto Coffee. And that has come to fruition now 100% that we've broken down the 236. This is technically your automatic rally, and I do not anticipate Hex to go higher than this automatic rally probably until 2024. And that was all a signal to consider de-risking, not to sell it all or not to even, it's not even financial advice. It was just to share that once we top out in these automatic rallies to anticipate moves down to the 236. And that was my idea behind the 0.34 cent level, I believe it was. Yeah, 0.38 cents. That was all I was saying, is to anticipate the 236. And we slammed through it clearly because there was this ritual with the Pulse Chain launch. And I'm not, again, aware of all the nuances, nor do I care. I'm well aware that people that are dedicated to this project and in this project have their own reasoning as to why they've decided to give so much of their time and essence and prana to this particular ecosystem. It is what it is. That's not my expertise at all. But I do want to share how this was all given to people far in advance, how this concept would go. An automatic rally move followed by rejection and then leading to this 236 target. And now the idea that if you can't hold the 0.24 cent level, that a double bottom is underway, which could be a sub 2 cent hex, and the 2 cent hex technically hit. We even had some trading today into the 2 cent level. And now I'm going to go ahead and assume that I know everyone got like a copy of everything they were holding on Pulse Chain, and they're a copy of all the other tokens as well on that chain. Super interesting stuff. I guess we have zero chart data really of what Pulse X is worth. We just don't know. We don't know what Hex's price, I guess, technically is. And even if we did, we don't have any chart data to go over it. So for the people who care about this particular project specifically, I do think that this is done with. It's going to build support back into this horizontal trading range somewhere around the 0.17 level, as high as probably about here at 5 cents. So consider that range, and I'm going to mark that out for you right now. And that's about what happens after the end of an automatic rally. You chop around a little bit until you have a spring. And that's where things could get really ugly. But let me just mark off the price for you guys right here. Down to here. That's your range. It's a massive range, but we're working with a crypto that has had an amazing performance of 23,000% gains just off of what this chart shows. I think it did way better than that. And it lost about 97% of its value and had this automatic rally. And now you do have to look at massive trading ranges as far as, you know, right here to right here, about 5 cents down to 2 cents. So it can chop between these levels for quite a while until it has a spring. Now, what I would worry about in the future is if we come up to this level, get rejected on a lower high after the automatic rally, and then we have a spring. And your spring would bring you below a cent, probably into this trading range right here. I know this is going to sound super fucked up, and some people might not like this, but this is just how it works. Now your spring could look like this into this trading range right there. Now remember, when I wrote this, I had some people that it was not so savory. I think I even had one person that was like, take a screen cap, it'll never go lower. You know, I could probably try to find it really quickly. It was hilarious. That's the type of energy people give out after these things happen. And it's like, why do you... You know, like, why are you so confident? And it shows the tribalism is probably not the most healthy in this particular space, sadly. anyways, it doesn't really matter that much, but it's the kind of stuff that you do anticipate after it. And I know most people are very grateful for this, and most people are really open to the analysis, but some people still are a little bit too emotional. But yeah, just want to share with you guys that this is definitely a possibility after this all shakes out. Could have into September, October this year, sub 1 cent hex. And it would look kind of like that. Let me just get rid of this. My bad. Add that back in. Yeah. So again, just a recap of how this can go in the long term is you have your buying climax here, you have your selling climax here, you have your automatic rally. This is clearly the end of your automatic rally, and you base out for a little bit in your prior horizontal supports until you make a decision. Are you going to double bottom and hold the double bottom, or are you going to break into a spring? And you'll know the break into a spring if you go below your selling climax lows. So again, there is an opportunity if Bitcoin makes it into 33,000, 34,000. We could see Hex get bought up into 5 cents, maybe even up to this 6 cent level at the 302, and then it could get rejected and come back into a spring, something like this. And when you analyze springs, they like doing this inverse head and shoulder. I know it looks really awkward, but they like doing this inverse head and shoulders move, where you have a very sharp range. And you just look at this. You see how it went down, shoulder, head, shoulder, and it broke out. It's the same sort of fractal. So you could consider that if you wanted to play around with the fractal analysis. You could do something like this. It would just probably be way deeper. It would be starting here, and it would peak down into like September, October, like that. And you could see if I put it at the bottom support of this red line, how deep it goes. It goes to about 0.007 cents. That's very possible. And I know people are going to be like, what? How is that? What? You know, but did anyone think that it would come up to these targets and then keel over this dramatically? Maybe some people did. But I got many people with feedback saying it's impossible for it to break below 0.38. So hopefully this helps. Hopefully this gives some people some things to consider if you're holding on to Hex, if you're somebody who's not staked, if you're just in it to play the traditional swing trading game or whatever your situation is. I get that the Hex community is actually quite educated on what's going on here, on how to actually use blockchain technology. Like they know how to trade on chain, and they're kind of seeming to be a group of people that are against exchanges. I'm not against any of that. I think that's a skill that very few people tap into. Most of us have become very reliant on exchanges. So yeah, there's something to be admired by them for sure. And again, I'm neutral in the process. My job here is to just analyze the data. So I hope everyone in the Hex community that followed up on these month after month warnings now can see the reason why I was warning you. So let's move on to the next project, which is Helium. I'm going to have to look at 2 charts, sadly, because we have this Helium chart that goes back with the all-time data to September of 2020. And for whatever reason, it cut off. Maybe it got delisted from Binance. And then I have the current chart right here. So let me just show you this all-time chart and what we're working with. Actually, no. That's really unimportant, I believe. I'll swap between them if needed, but just wanted to let you know. I don't have that all-time chart going all the way back. Continuing to today. So from top to bottom, this thing lost 97%, and it is continuing its sell-off. Excuse me. It's continuing its sell-off now back into the lows of March, while a lot of things are actually kind of recovered slightly. This thing has really been on a price discovery to the downside energy. There's really nothing super positive to say about this. The fact that it lost 98% of its value, it's holding on by a thread. It is essentially trading back into its lows from its launch. 117 is in the cards on this, and when we get to September, October, this thing could start to break below 60 cents. This is a really speculative play. You got to be careful with this one, I really hope that whoever's holding onto this project, you consider to hold about 2% or less of it in your overall portfolio, because this is not something that you want to gamble large sums of money on. Now, I'm well aware that Helium has its own like mining device. You know, you could actually have a Helium miner running out of your house. It's pretty cool. But yeah, you're basically just earning a token that's losing value over and over and over and over again. And I don't really know if there's much of a future in this, to be completely honest. Especially with this chart we're looking at today. Because if it's free fall dropping like this, imagine what's going to happen if Bitcoin was to move below 20,000 in the future. What would happen to this? Well, I'll let you know. It'll go below $1, and it'll move from $1 to probably 50 cents in a single week, because that's how weak this project is. You know, look, it could lose 80% of its value in just 30 days right there, from that drop to that drop. Comes up, could barely hold, and then an additional from top to another drop down. About 90 days, 74% additional. Then you can see from this top to right here, another 70%, barely holding its sideways range for 2 weeks. I mean, you see where this is going. It's a shit coin. So definitely be careful. Be very careful with this project. There's very little chart history showing that we've traded at a time of hardship. And what I mean by that is we did not trade before the C19 crash. That's something that I bring up a lot with altcoins, is I like to see data coming in from 2019 leading into the C19 crash. And then in the future, in the current data, I want to see it with higher lows above the C19 lows. If I could get both of those markers, it makes me feel a lot more confident. But let me revisit the Litecoin chart to just remind you. Here we have the C19 lows coming in at around $41. And right here at the June 2022, we saw Litecoin retest those lows. That's not good. You know, like that doesn't look positive. Now, Litecoin has pretty much already completed what was to be anticipated of an automatic rally coming into these support lows. I don't really know. Like, you know, like it never made it even up to the 0.5 like ETH did. So it's still weaker than most of the well-known OG coins. So Litecoin had its run back in the day. Of course, it had this insane breakout, but everything back then did this. The same way any coin that was launched before the 2020 season did well, just because it was in the right place at the right time. Doesn't necessarily mean that it had much of utility or any working technology or a solid team behind it. That's why we need to be very careful when we move into the September-October timeframe of this year, because that's the environment where we're going to have some pretty harsh wipeouts. And nonsense projects, they're not going to make it through. You know, it's like there's a flood coming, and I'm letting you know when the water's at your ankles before it gets eye level. So yeah, not a whole lot to say about Helium. It's a very weak chart. Price discovery to the downside, essentially back testing its launch levels of 2020, breaking through its lows of December. It's not looking healthy at all. And no real automatic rally energy whatsoever. I mean, even if we were to have another move back to the 236 right now, that would be miraculous. So if somebody's already heavily invested in this, I would just, I guess, you know, this isn't financial advice. I'm not telling anyone what to do. I'm not a financial advisor. I would just hold, because what are you even selling at this point? Yeah, really not a whole lot to say on this. So Helium, I'm going to give that a big thumbs down. Now let's move over to Ethereum Classic, which I don't remember going over for a while now. I think I looked into it. The last red pill that I talked about, it was like red pill 31. We're at 111 now, so it's been some time. So I have a lot of chart history to work with. I like that. We have data going back from 2016. We can clearly see multiple cycles here. Wow. Okay. So this had a really parabolic rally into May 2021. It did not do what Ethereum did, which went one leg higher into November of 2021. So this looks like a traditional 2019 bull run. Like this is how the bull run of 2019 went. Excuse me. Oh, wow. Okay. Now you see this is the C19 crash, but it held supports. Very nice. A lot of altcoins actually went lower at this moment, including XRP, but Ethereum Classic held. And not only did it hold its support level at 350, but it went on to basically recover out of it in a parabolic fashion. So that's a very positive marker. Now at its local lows, you can see that if we were to measure off the C19 lows to its local lows, that's 263% up. So even if you bought this horizontal trading range of 2018 through 2020, that's 780 days or so, wherever you bought there, you're still up today. That's a very positive thing. That's not the case for a lot of other altcoins. So 2 positive check marks for Ethereum Classic so far. Now let's see how much value it lost. Okay, only lost 92%. That's better than even Ethereum back in the 2018, 2019 cycle. In both situations, fuck. Okay, wait 1 second. Okay, we got about 6,000%. Oh my good. Yeah, wow. Okay, this is one of the better looking charts. I haven't seen a chart, I think, this good in a while. Yeah, I'm like perplexed. Okay, so yeah, I think that this is looking pretty great. Let me pull some fibs and see what's up. See what our automatic rally. Oh yeah, this is probably, that was the automatic rally going back here. It was right there. So we had a 92% sell-off, and then off of that sell-off, we came right below the 0.5 fib, and then we got back to the 236 pretty quickly and started getting rejected off the 236. So this has completed its automatic rally, and now it's into buying opportunity territory, because if it could break this level right here, I'm going to show you it's a clean trend line. Boom. If it could start closing below this trend line and start treating it as resistance, something like this. Now, again, it could go one more time up, and then boom, rejection off this trend line, come down for a double bottom, and then we'd want a spring. Now, let's see what our level is on the spring concept. Yeah, that's fucked. That would be big. That would bring you right back into the horizontal trading range of the prior cycle, which looks like this. If you had to map it out, supports and resistances, it's going to be there to here. That'd be like really the meat and bones of that horizontal trading range, not including the extremes. So yeah, that fits you somewhere between $4 and $8 right there, the 1618 at the bottom. You know, I mean, let me see really quickly. That's a tough one. That's a tough call to make. Where to start this fib, this bearish fib from right to left, from low to high. Yeah, I would just say about $6 on the spring is very possible. That'd be bad, and I don't know if this coin can lose as much value because it's a very good looking chart thus far. It's a very positive looking chart. So yeah, guys, this looks really decent. I would say perhaps there's some bear flag energy going on right here that could form. So you could have something like this, go to the top of the flag, and then you start breaking below it, and then you could consider this level right here your flag pole. Let me show you right here. I mean, we could be dramatic on this because it's an altcoin, and then it would kind of bring you somewhere. Okay, there you go, right into $6. All right, I mean, yeah, I would say probably into 6, 7 is your target range, and then I don't know if I would feel weird accumulating some of this. I rarely am open to a new coin, but we have some serious length and chart history. We have pretty solid performance. I mean, we're holding higher lows from the C19 crashes. Looks good. And now we can't even really say that there will be a spring, because if you analyze the last cycle, look what happened. Buying climax, selling climax. You have this sort of automatic rally energy. Let me quickly show you what's up. I mean, I don't know if this wick is confirmed, so it's not fair. But yeah, right there at the 0.5 fib, look at what happened. We had this automatic rally into the 0.5 fib. Right here, we had this automatic rally right into the 0.5 fib. Then we came below the 236 pretty quickly, like right away. Here, we broke below the 236 pretty much instantly. And then we traded in this horizontal trading range for some time, you know, held it pretty nicely. That would be like pushing up here, pushing these red lines to here. We could pretty much play between 14 and 23 and repeat the cycle. But I just don't, you can never really tell what's going to come this September and October. So I'd rather be patient and just let this come to fruition. One thing to say here is there's a clear descending resistance. Could be trading up into that, the 236. It's not going to be too positive. And the fact that Ethereum right now is looking like it's trading here whilst this is trading low, it doesn't necessarily mean it's correlated to the movement of ETH, even though it's called Ethereum Classic. So it kind of has that Bitcoin Cash energy, or the Bitcoin Satoshi Vision deal, where it's not 100% mimicking. Okay, cool. Interesting chart. I will save this for the future, marked off. Now we're moving on to Theta Drop. Oof. What the fuck is this? Okay, we're going to move through this quickly. Garbage. Yeah, what is this? All right, so it's price discovery to the downside. No real anything positive to say. Oof, yeah, horrendous chart. Okay, so just what we're working with here, this thing moved from 6 cents down to 0.002 cents. You got your 236 at 0.004. We have yet to really have a buyback off this level. We just continue day after day to roll over pretty more violently than ever. So this thing's in price discovery to the downside. The worst time out of all times to be in price discovery to the downside is whilst Bitcoin and these top projects are actually sitting up near the 382 and 0.5 fib. This thing's doing the opposite. It's obviously tied to Theta. I'm bullish on Theta in the future. Even though I still plan to de-risk Theta when it hits my upside price targets, but yeah, I'm not really too confident about whatever the hell this thing is. I don't know anything about this project, and clearly very speculative. I mean, if we just quickly pop into the T-Fuel chart, yeah, at least T-Fuel is holding its December 22nd highs, and it's holding in a horizontal trading range that's essentially been in for one straight year, which is bullish. It's not just like cascading, falling forever. It's already had its dramatic sell-off. It's gotten some rejections in the 236, not really much of an energy into the 382, but it's at least played into that 236, whilst this is down the whole way. Yeah, so I guess it's a timing thing. Whenever this was, it was released at a bad time. Okay, I can't really say much more about it because it could continue to fall until it's it loses another zero on the downside, and no automatic rally concept in the cards for this. It hasn't even really had a cycle. The chart data is super limited, but at least it's over a year. That's why I accepted to look at this initially. But I try to go pretty blind into these. Not do any pre-analysis. I just check and see if I have enough history. Yeah, I wouldn't touch that thing with a 100-foot pole. Let's move on to Render token. Also, by the way, it's the Red Pill podcast. We're spicy sometimes as needed. Don't take offense to this. You didn't make the project. You're not on the team of the project. Don't get offended. And I'm bullish on Theta, but whatever I just looked at was dog shit. Okay, so I'm going to go ahead and say that this is not all the full chart history that's possible on this, but it has over 500 days of data. The reason I said what I said a moment ago is because it free fell from launch, so that's kind of what T-Drop did. It looked like this, right? Like the same sort of energy, just free fall from launch. Now, what you can see is a little bit of a horizontal trading range, and once it got above that 382, it's made it into the golden pocket territory. So that's really what you anticipate on an automatic rally. So we had this W breakout bullish, got rejected at about 250 into this cluster of trading before this cascading drop. So this was clearly a key level, somewhere between the 618 and the 702. I don't think this thing's going to go over $3 on this cycle, but if it is to, I think this level right here of 325 would be another peak, and then that'll probably be it. RSI is looking okay. Let's look at like the weekly RSI, see if we have any data. Okay, we've made it into 70 on the weekly. Kind of cleared. Yeah, Sort of. I wouldn't call any bearish divergence just yet. There's not really enough data. Anywho, yeah, this already made it into the automatic rally territory. And if you were to buy off of this horizontal trading range, I mean, that is a 450% gain. And most of your automatic rallies are somewhere between 200 to 500. So good. Anyone who got in this during this horizontal range between June 2022 and the start of this year, pretty awesome, because it's made a nice move. You can see its rejection off the 618 brought down to the 382, but that was a clean back test. Now I don't really know if it could go much higher. If it does, just want to look out for that prior high level before it sharply fell, and that's around 325, right there around the 702 fib. And as for downside, you would want to be looking for this peak right here and this low of that W, which brings you around the 382. So just consider any 3-day or 2-day closures really below $1 to move to the 236, and that would complete your automatic rally fully. Not only to the top, but to the bottom. And then you would start looking at this horizontal level of 40 cents. So I could probably see by September, October, this back at 40 cents again. So trading into these levels is a solid opportunity to de-risk, as all automatic rallies are. The time when they're at the upside, like we talked about with Hex, when it was trading up here, it did give you effectively, almost a full month to consider getting out. Especially if you were educated on the Pulse Chain launch, you would know about this whole selling the event. That's clearly what happened. You could see the day before it moved up to 9 cents and then just cratered the following days. So you don't want to mess around in automatic rally land. You really want to take advantage of these highs if you are in profit, of course, because these can turn around real quick. Clean rituals happen all the time in this market. So we're going to leave it at that. This was actually super packed with gems. This entire podcast, we went over so many things really about what to look for with Bitcoin's weekly close coming up. I hope you guys learned a lot. And if we get that 28,000 close tonight, that would be insane. But we have a lot of time for that to all go down. That would be a 2-day and 3-day candle closure. So we want to look out for those for you traders that are in the community. And as well, any astrologers that are in our community that are aware of some juicy data points between May 17th and May 23rd, please feel free to share. I think it could be very helpful for the whole community. Share it in the crypto or in the astrology text channel inside of the Discord, and we'll all be checking that out whenever you guys post. So I appreciate every single one of you. Have a beautiful rest of your week in the Matrix. Much love.